Okay, good morning, everybody, and welcome to the third of the ABA Future Pillar webinar series this year. My name is Nick Giretto, for those who don't know me, and I head up the Future Policy team at the ABA. Basically, we have responsibility for the intersection of banking, technology, and government regulatory policy. And one of the hot issues in that space, of course, is AI. My team also has responsibility for AML, CTF, and scams. And there's a lot of concern, I guess, about the use of and the potential misuse of AI to undermine money laundering and terrorism financing controls, and to perpetuate ever more sophisticated scams. Just ask Twiggy Forrest, for example. However, AI may also be the knight in shining armor that can improve the effectiveness of those AML, CTF, and scam controls, possibly even while reducing the cost of compliance. So there's a sweet spot that we're aiming for here, which is, can AI, on balance, become a force for good in the fight against financial crime? And I'm really delighted that in today's webinar, we'll be able to explore that a little bit more with a panel of experts who are already not only looking into the use of AI in this case, in this sort of area, but actually already implementing it. A lot of the talk about AI has always been getting ready and preparing the business cases and all of that sort of stuff, all of which is still important, but some people at least are actually starting to make progress in the real world and getting some real results. So that's going to be the opportunity we're going to look into today. So how can we use the AI-driven tools to fight against financial crime without breaking the bank? So our moderator today is Nish Dhammaratne from AWS, and then we will be joined by Vic Panwar, who is the Principal for Global Banking Strategy at AWS, Stuart Bloxton, the Data Platform Lead at Trust Bank in Singapore, and Ritu Bandari, a financial crimes expert with some pretty detailed background in the AML world. So collectively, they bring together the expertise to explore this topic, and really looking forward to hearing from them. You will have the opportunity to put some questions in the Q&A bubble as we go along, and we'll see how we get to with those as we come towards the end of our time this afternoon. But right now, or this morning rather, over to you, Nish.
Thank you. Thank you, Nick, and welcome to all of you. First of all, I want to thank Nick, Nat, and the ABA team for the opportunity to collaborate with AWS in this webinar series. We're privileged to be here. And I also want to acknowledge the country that I'm joining in Park Street in the AWS office, the Gadigal people of Eora Nation, as the traditional custodian of the country we are meeting today, and pay our respects to their elders past and present and emerging. I am joined by an esteemed panel, and I think Nick gave a brief introduction. The panels to bring the insights, impact, and learnings on the financial crime changes in Australia, particularly the convergence of technology with AI in managing fin crime to the future. Globally, AWS works with many of the systemically important banks, the GSIBs, as you know, in their journey to safeguard customers through AML, counterterrorism, frauds, and scams. So we're going to cover the topic today across sort of three segment areas: the regulatory backdrop and the landscape that's happening in Australia. We are going to look into technology transformation, particularly with AI and agentic AI, and then we will also talk through to the future state solutions. And obviously, as Nick mentioned, how do you safeguard your customers with the emerging technologies? I just want to briefly share the background to the panel. Ritu Bandari is the co-founder of Platinum AML, a consultancy firm, and having spent more than a decade with both banking and regulatory experience. Stuart Bloxton is the data lead at Trust Bank, which is a bank backed by Standard Chartered Bank globally, based out of Singapore, and one of the very first APAC banks to deploy an agentic solution on suspicious activity reporting. And on AWS front, Vic Panwar, a global specialist in fin crime market development based out of New York with previous experience in SaaS and Oracle. And as Nick mentioned, I'm Nish Dhammaratne, banking specialist based out of Sydney for AWS. So let's just dive in now. The Austrac CEO, Brendan Thomas, views the upcoming AML/CTF reforms as a necessary modernization to protect Australian financial system from criminal exploitation, rather than an increased regulatory burden. So, according to the Austrac statements, reforms are needed for protection of from serious crime and essentially to prevent organized and serious crime, closing the gaps in regulation by including high-risk sectors, and the reforms essentially address weaknesses in the current regime. And thirdly, to address global leadership and change position of Australia to be the global leader in AML and CTF reforms, which I think is really great. And this has been in the works for some time. For those who are in banking, we've been working on this, expected changes for a while. Now it's the time the rubber hits the road and expectations of implementations by March next year, in July, and so on. So with this backdrop, my first question, Ritu, is to you. What is the overview of the 2026 AML/CTF changes and the impact to the sector, particularly for the banks?
Thank you, Nish, the ABA, for having me here this thing. So Nish, you've touched on, a high level, really the intent of AML/CTF reforms, and one of the key changes is definitely introducing regulation over a number of new high-risk customers. High-risk such as real estate agents. But for existing reporting entities, including banks, there are some significant changes resulting from the reforms. So the reforms present a significant change to the legislative framework, and really the biggest since 2000, when the Act was first introduced in Australia, that will largely take effect as from 31 March. But importantly, the intent of the reforms is to shift the regime to an outcomes-based framework. And what that really means is it's no longer enough simply to have, policies, processes and controls that meet the letter of the law. Reporting entities need to be able to demonstrate the effectiveness of processes and controls in actually identifying, mitigating and managing relevant risks. So there are a number of significant changes resulting from the reforms, including, the change of what will constitute an AML program. But for this group, I really wanted to focus on the key changes that will have the biggest impact from a technology and operations perspective, and the ones that need to be implemented by March next year. So really the first one is around CDD. So I'm sure everyone on this call will agree that is probably one of the most significant changes, and there will be a huge impact from a technology perspective and really looking at the end-to-end customer journey as well. So just going down into a bit of detail into what that entails. So now as part of the initial customer due diligence that needs to be completed before customers can be provided a designated service, there's a requirement to risk assess those customers beforehand, and also essentially to identify owners that exposure, which will largely, I expect will be done by screening. Those two processes have traditionally been done on a day 2 basis, so it does mark a significant change for industry. And really this impacts the entire customer journey. Technology changes will be required to integrate these steps into the onboarding process. And I think importantly, there will be a look at technologies, and that can be used to ensure there is still a smooth onboarding process for customers. So how to look at minimising those false positives for screening, and how do you also make sure initial customer risk assessment is well targeted to truly identifying high risk customers. This can be changes around ongoing CDD and having a dynamic customer risk assessment model. So there is going to be the expectation, really the requirements around ensuring there is more of a dynamic model. So Austrac being clear in the legislation is focused on ensuring there's that continuous and identification and reassessment of customer risk with appropriate actions. Again, that's where technology plays a good part in being smarter and more targeted at identifying those risks and being dynamic. The one I wanted to call out was around transaction monitoring. So the transaction monitoring obligations have been in some respects. So there's, more reference to monitoring from behaviours as opposed to just unusual transactions. Also importantly, now specifies a long list of predicate offences, which really aligns to FATF that now need to be monitored for. Some of these some of these offensive entities will already have transaction monitoring rules for, and you will have appropriate coverage. But in some cases, there will be a need for adverse news screening, for example. So there's now references to offences like murder and, environmental crime. And again, that's where there needs to, need to ensure there's the appropriate technology and algorithms to reduce the false positives and really focus on identifying the customers that do need to be looked at in detail.
Fantastic. And as we know, AUSTRAC has always been a principle-based regulator as opposed to prescriptive rule-based. And we know there's going to be some very short timelines, as you know,
yes,
from now till March. What are the strategies and proactive compliance preparation that you have seen just in terms of in the industry and your customer base and banks, particularly around looking at the gaps that they have to fill in?
Yeah, sure. Thanks, Nish. So I'm sure everyone on this session is aware of the statement that the AUSTRAC CEO put out in July, where there are some clear expectations around, how reporting entities need to prepare for compliance. And there is clarity around the fact there is a very short period of time to comply with all of the changes by 31 March, but there needs to be very clear evidence that there's a clear implementation plan in place, there's steady progress, and that, there's continued focus on ensuring reporting entities are effectively continuing to identify and manage their risks. So, in terms of taking a strategic approach to this, so a number of entities, as they have done their impact assessments or are continuing to do it based on the rules that were released end of August, the key focus is on, what are the current gaps, looking at current state and what needs to be in place, looking to understand very early on what the technology impacts are or where technology can be utilised to, better, in some ways minimize the impact or ensure there's smoother implementation of some of the changes. And I think importantly, ensuring that there's prioritization on any existing controls that you have in place that are not effective. So there's very clear messaging that while you have till 31 March and some acknowledgement that some changes may be implemented after that date, there's a very strong message that you still need to maintain effective controls. And so again, I think if you think about what are the clear priorities, it really is around CDD. How do you ensure there's an effective onboarding process with the introduction of screening before providing a designated service? And that's where there is a lot of focus on looking at, whether you can use AI, for example, to reduce some of the false positive rates. And also similarly with transaction monitoring and the dynamic risk assessments, ensuring that there is consideration of using technology to be smarter and more targeted at truly identifying that high risk customers and activity. So I would just say, in summary, focus on areas where you currently have gaps that are critical to identifying and mitigating risks, because that's what AUSTRAC is focused on, and also being as proactive as you can in relation to any changes that have a technology impact.
Fantastic. Thank you, Ritu. And I think many of us have been in the industry for a while. Banking sector sort of developed rule-based engines and evolved over time with legacy technologies, both in AML, CDD, transaction monitoring, and also suspicious matter reporting. And if you go back last 10 years, all major banks have been subject to increased regulatory scrutiny, just specifically on that, and with some heavy penalties as well, which is pretty high in comparison to other developed markets. So I think the banks have also led to build more machine learning based solutions for detection, prevention, and build controls in both customer front-end applications as well as back-end processing systems. So I want to move a little bit more towards a global landscape and ask a question from Vic. Vic, what do you see at global, and what is the experience there, and how are global banks dealing with this legacy infrastructure transformation into meet up the new regulatory requirements? I think you're on mute, Vic.
Yeah, sure. Thanks, Nish, and thanks for this opportunity. So I really like the perspective on the AUSTRAC guidelines that have come through, and I think it is in line with the other regulators as well, right? And as you mentioned, across the globe, typically, most of the financial institutions have always created rules, right? If this is the process, create this sort of a rule. And those still exist. The reason being that, regulators have seen those rules over a period of time. Those rules have matured over a period of time. But I think the challenge that happens today is the rapid pace of evolving fraud typologies, right? The way the AML money moves, it's just rapidly evolving, right? So you create one rule and it became stale quite fast. And I think that is where evolution of machine learning came in, right? So if you look at it, you look at JP Morgan, for instance, right? They created this fraud intelligence platform, which is where, for anything that's reoccurring, which is a very known well pattern, you code it in a rule. But anything which is anomalic, which you believe is an anomalic behavior, you create basically a machine learning method according. So we see kind of a multi-layered approach across the globe where the rules will always exist, right? Because you don't want to run a machine learning for every standard deviation, right? Because you know that this pattern does lead to a fraud or a money laundering pattern, but then you want to create like a supervised, unsupervised machine learning approaches to detect emerging patterns. And now from then on, the question becomes that, okay, there is a particular anomaly that is seen in customer behavior, but what about the associations? Because a customer is linked to a universe of accounts, products, transactions, other people, emails, phone numbers, right? And this is where the question becomes that how prone a customer can be to a fraud or a scam or a money laundering behavior, right? And that's where the industry is now starting to move, where they're saying, I can be proactive and maybe look at the fraud or money laundering behavior based on associations, right? Hey, this particular email, which is probably connected to a 3-node forward, is associated to a scam. So how do I capture that network effect within which a customer is sitting, right? So this is where we are starting to say that the machine learning itself is starting to evolve into more association based, where I want to understand how prone this particular customer maybe become a fraud over a period of time, or may become prone to a fraud or a scam or a money laundering behavior. So that's kind of the evolution that we are noticing across all this realm. There are different ways, AI also being utilized. I'm sure we'll delve into it. Would love to share, but you look at big crypto firms. You look at JP Morgan Chase, Capital One. All these firms have really deployed these real-time machine learning capabilities that is working hand in hand with the rules to basically say anything that's standard goes through the rules, but then anything that's emerging, machine learning does allow us to predict better.
Fantastic. And I like the fact that you're bringing the association base, because that sort of ties back to what Ritu talked about. How do you get the KYC, CDD completed prior to a designated service being used by a customer, or dynamic risk assessment? So I want to dive a little bit with you, Vic, because you're very close to a number of banks experimenting on AI, particularly agentic AI. So what do you see? And global banks are investing heavily into this space, and that's because there's a huge operational expense on AML, KYC, fraud scams that are being borne by the banks at a large scale. So what are the use cases? What do you see as best? And after you explain that, Stuart, I'm coming to you to share the practical views as well.
Sure. In fact, one surprising thing that we started to see emerging, right? Because in the fraud space, in the fin-crime space, there's a lot of PII data that sits there. And of course, every bank being a regulated entity is very protective of it. As the AI was starting to, become more popular and banks were exploiting, we kind of noticed that probably AI may not catch up on the fin-crime or fraud space as much. But to our surprise, actually, that's the topmost use cases that we're noticing globally, where AI is being deployed and actually has gone into production for several use cases, right? It started from all the way till the end, where the fraud has been identified and alerted, and then that alert needs to be investigated, right? Because we call suspicious activity reporting. There are regulatory implications. So that's where the first place where everybody looked at AI, how it can help a fraud analyst investigate, collect data, because the legacy, data is scattered in 10 places. It's very manual way to bring data together, make sense of it, summarize it. That was the best use cases, right? So you look at NASDAQ already using extensively AI in that space to summarize all that investigation. Almost 80% benefit in terms of what a fraud analyst would do versus how AI is sitting alongside fraud analyst and helping them investigate. But then that AI has kind of moved forward to the value chain, right? So the best example is actually building agentic AI and around the whole know your business KYC CDD process, right? Because that process, if you look at it from an operational perspective, is very, very manual today, right? You get information. The first thing is it's a very non-standardized set of information, right? It's one person versus the other on a consumer side. pretty much same documents, but the moment we talk about entities, we have non-standard set of documents. So we have to identify people, entities, financials, screenings, criminal databases, public databases, and whatnot. And this is where we are starting to see initially emergence of using AI agents for specific purpose, for instance, screening, right? So for instance, the moment we say this entity is high risk, people are deploying, banks are deploying AI agents to go and scan the Google API, scan the social network, scan the court cases, and kind of bring those screenshots and summarize the screening effect. But then the aspect was, now I need to do this perpetually. And then that's where we are starting to see emergence of agentic AI, where, on the onboarding first instance, you create an agent. It basically goes check the financials, checks the entity, check the UOB databases, and then kind of keeps, once you finish that process, this is where the perpetuity comes in, where it says, let's say after the CDD and I call it, hey, I'm going to review this person or this entity every 6 months or every 2 years. Probably you can now deploy an AI and say, hey, Mr. AI, go and check everything that we checked on the day one and tell me if there is a significant change in the profile. And if there is, then I'm going to reinitiate that intense and rigor in the whole diligence process. But if I don't see much shift in the profile that we assessed 6 months or a year prior, maybe we take it, in that fashion. So this is where we are starting to see the know your customer process, know your business process, the CDD, the risk scoring, where agentic AI is really, really bringing this efficiency. And the idea is not to say that we don't need analysts, we don't need people, but what the intent is to create these digital workers who are actually sitting with these analysts and making their life much more efficient and much more simpler. I think that's the trend that we're noticing right now.
Absolutely. And I think I was in a conference yesterday morning, and there was a lot of talk about people, processes, and product, how agentic AI is going to build into that. So thank you for sharing that insights, Vic. Before I move to Vic, Stuart, can I also ask the audience, if you have any questions, please feel free to include that in the Q&A chat bubble. We're happy to take that at the last section of the panel. Stuart, over to you. As a digital bank, a trust bank, it's a highly regulated regime under Monetary Authority of Singapore. You have been one of the very first banks that we've worked with you at AWS to look at agentic solution and deploy it and really be successful with that. What has been your approach? And in your view, how transformative has it been in your FinCrime journey?
Absolutely. So I think in terms of the agentic AI journey that we've been on, I think Vic really set it up very nicely, which is that, as you start putting in more and more complex rules, the cognitive load that the analyst is under in terms of being able to understand, all these complex relationships between different counterparties, understand the context of the customer, how it's changing over time, the customer due diligence. There's numerous systems that the analyst has to basically go through to contextualize any given alert that gets generated. And so we're quite a new bank. So we've only been around for 3 years, but within those 3 years, we've now got over 1.5 million customers, and so our transaction monitoring alerts just continue to grow and grow and grow. And so to be able to keep pace with that throughput and make sure that we were able to really conduct thorough investigations in our transaction monitoring, this is where we look to agentic AI to help with this. And so it's been absolutely transformative. So where we looked at applying it is essentially in deploying a sort of fleet of agents that are highly specialized toward each of those key areas that needs to take place for an investigation, and essentially grabbing, contextualizing, and really modeling a lot of the similar steps and behaviors that the analysts were actually performing before. But rather than making a judgment and decision, where we wanted to go and where we wanted to do this responsibly is basically provide all the factual information and all the factual context to provide that sort of preliminary implementation of all the facts, and then provide that to the analyst to then make that final judgment and decisioning. So it sort of goes from the rules and the modeling to then, a preliminary report to then the analyst then making the judgment, rather than the analyst having to go in and pull and collate all the various information, which is actually where we saw the biggest bottleneck. So overall, we've seen a 70% improvement in the throughput, and we took a sort of 2-hour process per report down to now 30 minutes, which is all just the analyst doing the final investigation and rechecking and revalidation. So that was very transformative for us.
And I know this probably is a question coming from many bankers out there. Did you have any quality check of that, and obviously improvement of accuracy over time? And also a second one, which I probably didn't put that in our initial discussion, is, has there been any feedback? Like, what has been the feedback from the business, from your own sort of risk and compliance teams? Has it been positive experience?
Absolutely. So I think one of the keys to the success is that you can't just build these solutions in isolation, and it can't just be technology centered. It has to work hand in hand with the subject matter experts. So the same stakeholders that are actually using and running the report every day were also the QA team that was essentially enabling us to align and because the alignment of these foundation models and the prompting and the context and the way you break down these agents into decomposed tasks needs to be really explainable and understandable by the subject matter experts that are actually using it. So when we went through this whole journey, as in when we were picking up new alert types, we were getting rapid feedback. And one of the really nice things that we did was we actually used the feedback to then realign with whatever the LLM outputs were, and we actually use that as a ground truth data set, and that now provides a automated backtesting capability for us. So as and when with these LLMs, they're incredibly dynamic and incredibly sensitive to small changes. So by continuously working with those SMEs and not just aligning in terms of the test out the outputs of the production reports, but actually aligning on how to actually evaluate those outputs, we were able to get a really robust change management pipeline that we could continue to build on to make sure that it's reliably giving good outputs, and we can continue to extend to add more and more types of alert types. So yeah, we overall I think as and when we launched it, there's been lots of feedback and and refinements and changes, but yeah, absolutely aligning how the LLM behaves is super critical, and you need those subject matter experts to do that effectively.
Yeah, and can I also, just for the benefit of the audience, you built it on AWS infrastructure, which is Bedrock. How long did it take for you from the proof of concepts to deployment, and what's been the timelines?
Yeah, absolutely. So from the initial proof of concept to getting the first alerts into production, it was about three months. So this was where we had to provision the Bedrock platform. We set up so this is both in terms of all the compliance assessments and legal assessments of the foundation models, the cloud service onboarding process that we have internally within the bank, but also the actual implementation of the use case, and also the other aspects of Bedrock is the guardrails, also the Bedrock evaluations that we've made use of as well. So that really helped set the platform to get access to a reliable and scalable generative AI solution that was super essential in terms of being able to move rapidly and focus on the business aspects rather than being able to scale and manage the hardware of GPUs and whatnot. So that was really helpful for us.
Excellent. And I think that was the time Since then, we've also launched what we call Agent Core, which helps the organizations to build the key components of running agent in terms of memory, security, governance, audit trails, etc. So within the last 3 months, we've come a long way, and we've launched this globally to help customers as well. And I really like the fact that you mentioned like a 3 months time period, which Ritu, you mentioned the timelines that you need to change manage this, maybe proactively change manage. And it's just not the March timelines in Australia. I think it's beyond that. It's about that transaction monitoring and due diligence, right? So that's great. Okay, so just moving on to, I'm conscious of the timing, and if there's any questions, please feel free to put that into the chat. We'll address that. So obviously massive transformation is expected in banks and financial services backed by AI. What does the future hold? Like, will the banks be left with a typical risk aversion paradox, or are we ready to fundamentally change our business models, customer journeys? And Vivek, I'm going to start a question to you. What are the global best practices? Who's leading in this space? And what are the great insights you can share with us today?
Was that to me, right? Like I maybe
Yes.
I missed. Okay, yeah, sure, absolutely. So this is actually a great point. As I said, a lot of financial institutions globally, right? You talk about NatWest, you talk about large banks in US. Globally, everybody started experimenting in AI kind of post facto when the fraud has been identified and it's being investigated, right? And as Stuart mentioned, significant benefits were seen by the banks in terms of efficiency, in terms of the quality of the output that it was generating. And then we started seeing the push of that going to the other aspects. And I'll tell you, for example, Robinhood, one of the largest trading platform that built this whole AI-driven investigation approach, now they're trying to go upstream. They're saying, as we notice that there is a new emergence of pattern or a typology, can I now ask AI to also start coding the standard operating procedures, because those operating procedures are not known, right? Because it's a new typology. Based on those new typologies, I need to create some sort of new operating procedures. So the exploration is now beginning that where else I can take this, where else I can take AI and beyond, right? So they're saying, okay, I use AI to investigate something. I can use AI to prep something. For instance, we are working with a very large bank in US where they're saying, even before a fraud analyst comes in, and we're not talking about investigation, we are talking about when somebody's trying to open an account, right? When somebody's trying to open an account, you check several things. You might have 90% okay, but let's say email comes out to be a little bit risky and you don't want to decline the customer. Right now, analysts will come and say, okay, let me just cross-validate, because it's just one factor that's low risky. They will go into three-party sources and check some things and then maybe allow the customer to open the account. They're saying all those kind of self-service ideas, I can have AI service, right? We also have another large firm where they're saying, I also want AI to interact with the customer. So for example, if I were to make, based on the data that I have, if I have to make a disposition and say it's a fraud, probably, right? But what if AI can tell me that my disposition could change if I were to go back to the customer and say, hey, Mr. Customer, maybe you forgot to give me type of transaction or purpose of transaction, right? Things like those. So can AI be now more be in the recommendation where it can say, hey, I can relook at the disposition if only I can go back to the customer and ask for certain specific information, because with that information, I can make a more holistic judgment, right? So this is where it's just going beyond investigations and going just beyond, automating, let's say an onboarding process, but going into assessing the effectiveness of the controls, writing up procedures, creating these self-service fraud concept of self-service reach out to the customer to ask additional information to change disposition. So that's really where we are starting to see the AI or the agentic AI starting to involve beyond just, the regular cases that we all know around, like, the onboarding where, people are already experimenting and putting into production.
Fantastic. And I think I really like the point about using the mobile apps, and almost all the banks have very, very effective mobile apps at the moment. So you can connect the agent all the way through to the front end and see whether you could capture information. And we also know some of the banks that we are working today in Australia, they're looking for strengthening the pre-commencement customer KYC as well. So there's a lot of sort of focus area and reimagining that. Stuart, I have a question, because I still feel there's a lot of inertia despite all the hype around AI and agentic AI. and specifically for banks are regulatory driven and they risk averse in general. The question you mentioned about guardrails, right? So trust and reasonability and accuracy on AI and particularly agents. How did you design around that, and what has been your sort of guiding principles?
Yeah, I mean, I think when most people think about AI, it's sort of binary. It's either it's making the entire decision-making process and it's fully autonomous and sentient, or you're not using an AI and it's all human and rules-based. And I think there's actually a very interesting spectrum in between where there's enormous amounts of productivity that can be unlocked. But you have to go on a journey to climb that spectrum to get to that final end target state. So for us, when we start, I think the first most important thing is to understand what level of agency are you actually going to give to the system? What level of micro decisions are you going to allow the AI to make? And what sort of oversight is going to be there? So for us, the really important things, both in terms of usage of the bedrock guardrails, but also in terms of the implementation design, is that we wanted to make sure that there was no speculative language that the AI was actually producing. So we found that if we followed a lot of the Anthropic best practices, give it a role, make it really precise in terms of what it is that you want the AI to be assessing and looking at, and give very specific examples of in the system prompt so that it can give better overall responses. But we found that often we would get these cases where you would get speculative language. So there was a rapid money movement between this counterparty to this counterparty. This could indicate a mule account. So the first part is something that we actually wanted it to highlight and attend to and focus on. But the second part of this may be a mule account, we should take action, is not something that we wanted to bias the analyst. We didn't want it to then make that judgment. So we spent a lot of time in constructing a very specific agent workflow where we ensured that we were always analyzing and stripping out language that may be biased and may nudge the analysts in a direction that we didn't want. So I think absolutely critical, and I think as and when we build more and more confidence and we see the performance continue to improve, both in terms of models and in terms of new capabilities that are coming through, such as through Agent Core and Bedrock. I think we want to give more and more agency to these agents, to go further in that process.
Great. Can I also probably, Vic, I'd like to really ask you that question as well. What do you see the global banks, and particularly the US large institutions, thinking about when it comes to responsible AI and agentic AI solutions? Have they followed through something like a group policy, or what have you seen there?
Yeah, so I think we do see a mix of it. To be honest, when we kind of started seeing the adoption across the large banks, the global banks, the approval process of assessing the model, as Stuart said, right, like training the model, looking at the prompts, outcome, controlling the measures, it was done on a case-to-case basis. However, as you see the success with the first one, then becomes the race. The second one is ready to go, right? And then you say, hey, do I go through the same process again and go through the elongated process of assessing it? I think we are seeing a shift there because most of the banks are now realizing that if we do see the value of AI, and now as we talked about, agentic AI being used across the KYC in the front end onboarding process, the transaction monitoring, and the investigation side. How do we kind of industrialize this, right? And not every model takes 7 months or 8 months for approval. So this is where, we are working with several banks around how do we set up process in such a way, whether, you use a third-party model along with our Bedrock and so forth. How do we set up in such a process that use cases are gets piled onto an approved governance layer, right? So how do you set up these standardized governance framework, which has the observability, explainability kind of setup, and then you bring in these use cases on top of it. So that's the approach that we are starting to emerge now, because really, we notice it in the large banks that there's lots of use cases, and like Stuart said, right, like business people are super interested in this one, where they say, hey, I do see the value, but I can't wait 8 months. So this is where we are talking about standardization of setting up a layer where you have these observability and standard governance standards set up, and then you bring in these use cases on top of it.
Great, thanks, Vic. Okay, Ritu, I just want to ask a question more on in the future state, because you're in independent consultancy, you work with many customers. Who's leading? What do you experience in terms of on two aspects? One, readiness for the reforms next year, and are there more sort of keenness to adopt AI technologies?
Yeah, sure. Thanks, Nish. So just on the first part, so in terms of the readiness, look, I think given the timing of the legislation and the final rules being released, only about a month ago. So I think I'm definitely observing differences in terms of the level of readiness, but there are still a number of organisations that, I'd say are still at a relatively early stage. So there's a plan, they understand where the impacts are, but the actual deployment of the changes is, still in progress. And I'd say there's a fair bit of work to be done. And I've seen that across a number of reporting entities. So I think that's, I guess that's just an observation. I think as part of that, there is, look, I would say there's still very early discussions about the use of, emerging technologies or AI to support this. But I think there is, I would say there's an acknowledgement and understanding by some organisations that really is going to play quite a critical part. And again, I'll just come down to, the two key things I mentioned earlier as well. I mean, the fact that now you have to screen customers in advance, or you have to identify PEP sanctions exposure, but I think that will largely be done through screening. And I think that's where, there's a couple of customers I'm working with at the moment where they are looking at the use of AI to help reduce the false positives. So they're speaking to a couple of providers on that front. But the other one is around transaction monitoring. So there is look, I think there was always a need to look at behaviour, but, there's explicit requirements around monitoring for changes in behaviour or unusual behaviour. And there's also a very long list of predicate offences that need to be monitored for. So there's a lot of conversation around what's the most effective way to monitor for those. And realistically, not everyone can build a comprehensive, transaction monitoring rule, with detailed parameters for each of those predicate offences. So again, that's where there's, consideration of how to use technology to support some of that. And just as an example, for some of those offences, there isn't going to be just one broad transaction monitoring rule. It's looking at, do you target it on a particular industry? Do you on a high-risk industry for that relevant predicate offence? Do you target it for a certain cohort of customers? But again, the reason emerging technologies are so important for that is you need to be able to leverage the data that helps inform the population that you would apply that sort of rule to. So again, in summary, Nish, I'd say differing levels of readiness, but also there is definitely, now, given we're so close to the deadline, consideration of, how organisations can use technology to be ready on time, and particularly looking at, do we build internally ourselves and noting the timeframes, or do we buy? Just given that is, potentially in some cases speedier than going through their internal process. But of course, there's considerations on both ends.
Yeah, and I think we're also seeing a lot of institutions considering, some of the fintechs have brought in a number of solutions that may match the requirements. And
yes,
obviously, if those are effective, then there's a lot of, we see that as a trend as well. Excellent. I think we're on time for questions. So there has been some really interesting questions. I'm going to start asking in no particular order. This one probably, Ritu, back to you. Is AUSTRAC ready for the increase in number of sectors, entities that need to engage going forward? How will they better tackle data, in your view?
Yeah, sure. Look, that's a very good question. In terms of are they ready? So I'd say there's a lot of, and look, Austrac's obviously best place to answer that question. But I guess just an observation is that Austrac probably does have a bit of work to do, even in terms of resourcing, to be able to, basically to be able to help regulate and oversee the increase in the number of reporting entities. So there's going to be pretty significant jump in the number of entities that are regulated from July next year, including tranche 2. But and I think as part of that, to be honest, it's not just a challenge from an Austrac perspective, it's actually a challenge from an industry perspective. So, all of those organisations are going to need AML resources. And I think there's already, when you speak to recruiters in this space, there's already, you can already see the shortage. There's already a need for additional, needs on both ends. So, look, I guess my observation, like I said, Austrac's best place to confirm that. But I think there's probably still a bit more work to do to be ready and be able to oversee the large population of reporting entities going forward.
And I think also from July onwards, it's not like a hard deadline, but maturity levels of the new industries like real estate agents or law firms, etc., they will have to come to a level of maturity that the banks have already reached way beyond the level. So I think that's consideration as well.
That's right. And I think Austrac's also, been clear that they don't expect perfection, whether that's from the existing reporting entities from end of March and similarly for the tranche 2 entities. There is an understanding that will take a little bit of time to get, like you said, Nish, to the right level of maturity.
Yeah. Vic, I'm going to ask you these questions. Do you think that while AI agents can deliver faster and more consistent outcomes, such as automatically generating commentary, etc., there is an increased risk that investigators may rely too heavily on generative AI without making necessary adjustments or doing a thorough review? Could this lead to a decline in core investigative skills?
Sure. So far, what we have noticed as yet is that AI is, wherever the AI is being deployed, like in this case being investigations, it's not really a straight through processing. So there's always a human in the loop. So I do understand that where we are expecting AI to make a disposition and that disposition is then kept as a final decision, we haven't seen that happening as yet, right? But the expectation from AI today is to basically gather all relevant information in such form or fashion, which is where typically your fraud investigators or AML investigator are spending 80% of the time to say, okay, 5 transactions less than $1,000, these 5 accounts, these days, these dates to this accounts, customers. They're spending a lot of their time to collect all this data before they can even analyze. So I think the AI for now is basically gathering all that relevant information. In fact, Stuart put it nicely, right? Hey, it looks like a rapid money movement, but do you believe if it's a mule account, you don't want to influence the investigators? So the focus is to say, based on all the data that I look, it looked like a rapid money movement typology. And then you're basically allowing your human to look through that information and make a disposition. That's where we are today. Now, in the future, then because as we all know that there is a feedback loop, right? It's a self-learning initiative. So AI is learning over a period of time. Maybe there comes a time where you can start asking AI to make those dispositions, and then investigators looking at it. But that's not where we are right now. But it does help in terms of taking all the relevant information, making matches to the typologies, or saying this is an emerging typology that has not been noticed but does look suspicious, right? And then investigator make that. But what we do see is triaging, right? So this is where AI is kind of helping, because look at large banks, right? Like the large bank that I mentioned in US that we are working, it's in top 5. They get about 5,000 alerts a day. Right. And, to analyze those 5,000 alerts, you need army of people. So that's where they're saying, let this AI to at least do is kind of triage these alerts, like look at all the corresponding data, do the matching that what typology it matches with, match it with our risk appetite and say of these 5,000, these 500 are super high risk, and let's just go very thorough into it. And then you can say maybe 1,000 are just kind of very, very low risk and low triage. So that's where we are starting to see AI being utilized. But as of today, we do believe that there's a human in the loop that's kind of making that eventual decision and disposition, but it kind of helps, the AI is helping them get all the relevant information, which is kind of a routine task. That's what they're spending the time with.
Yeah, and I really love that point, because I think there's some kind of a misconception we need to do everything through AI. That's probably is not the case. You could even make some exclusions to say if it has been a high risk customer, the current investigative process can continue. But for low risk, we could do that through like a mass scaling and filtering process.
Yeah.
Stuart, a question specifically for you. How long did it take you to obtain the quality of output from the agents? For example, errors and hallucinations, etc.
Absolutely. So I think we spent probably the majority of the time on our evaluation pipeline. So I think it's really important, and actually not just in building those metrics, building those parts of your really this is your LLM ops. So how you even though we're not fine-tuning these models, we're still fine-tuning prompts, changing context, changing the trajectories as to how these agents are flowing to basically create a final report at the end. And so it was really, really critical not only just to have these pipelines that can do this evaluation, but also to educate the right stakeholders. So the risk and compliance folks, and the the security teams, and the business SMEs as well, to understand what are things like correctness, what are things like groundedness, what do those actually mean in their context, and what are those thresholds where we feel comfortable as an organization to actually ship this into production and operationalize it. And then whenever you make a change to any of those different system prompts or agents, how do those metrics get affected? So that was a really, really important part. And out of the 3 months of development, probably 60% of the time was in basically setting that up, educating that, and also in terms of the even though you've got capabilities like LLM as judge, and you can embed these into the pipeline, if you're not curating the right data and curating the right examples, then your POC, where you're only touching a thin slice, you may have optimized it for that, but maybe it doesn't generalize to things that are not within your test set. So this is also something where we spent a lot of time and did other areas of machine learning or unsupervised machine learning to analyze the data to get lots of different diverse examples, to make sure that what those metrics, the metrics we produce, were actually robust and were actually representative of the distribution of data that we had coming into Trust Bank.
I think that's a good one, because there's another question about how do banks treat these AI components from a governance lens. I think you've answered that, but AWS also has a point of view about responsible AI. We've published a framework around that as well, which I'm happy to share if anyone has any specific question on that. Ritu, there's a specific question to you around monitoring complex typologies such as modern slavery, and that's becoming increasingly difficult, especially given the list, etc. What's your perspective there in terms of how do you see small to medium-sized institutions managing this?
Yeah, sure. No, thank you. And actually, I did see this question when I was responding earlier, just around to what some organizations are doing in this space. So there are definitely the small to medium where I agree they don't necessarily have the funding or the resources to support, advanced technology platforms. So I think this is where there's a couple of different options. So one is around having if you do have an automated rule, it's having it very targeted. So it's applying to quite a limited population of customers, or relevant, I should say, population of customers. And I think the example that's in the question, I know this is broader, but in relation to modern slavery. So an example is, maybe if there was a more simplistic rule that applied to customers that are industries that are known to to be high risk when it comes to modern slavery, and looking for things like, sort of low remittances or, other indicators that are relevant to that. But the other one is actually potentially using adverse news screening. And I know traditionally organisations don't necessarily do adverse media screening for all customers, because it does quite often come up with a very large number of, false positives that then need to be worked through. But that again is another option. But again, needs to be applied in quite a targeted way so that you're not getting an overly significant number of alerts. So look, those are just a couple of options, but yeah, always, just happy to have a quick chat afterwards if helpful.
Great. Well, I think we're about time. So I just want to really thank all of you. Vic, thank you for joining us from Seattle. Stuart, thank you for your perspective in sharing the APAC and Singapore experience. And Ritu, as always, a pleasure to have you on the panel. So I'm going to hand over to Nick for the closing remarks.
Great. Thank you all, and thank you for a fascinating and really interesting discussion. I guess a couple of observations from me. This question of scalability of the AI solutions to smaller entities, I think that's going to be a really interesting challenge, because many of them won't have, and Stuart, I don't want to underestimate the work here, but many of them won't have the advantage that you had of starting with a blank slate. Right, so a smaller entity that's got to figure out its pathway out of a legacy environment is a particular challenge. And I wonder whether we will see the emergence of AML-CTF or AI-driven AML-CTF as a service. Potentially that's a pathway that we might see. I guess the other thing I would say is, as Ritu has sort of highlighted, the changes to the Act and the rules now are pretty profound. And even where AUSTRAC have sort of said their intention has been just to clarify existing obligations, the mere fact that they've changed the words does create a new need to investigate from a compliance point of view and reassure yourselves as to, are you actually compliant? And people quite rightly are focused on the extent of change. March 31st is not long away, and even with some flexibility that we will see from AUSTRAC, there's a lot to do. However, I think the big takeaway from today's discussion is it has created a window of opportunity to re-examine the foundations of the way some of these things are done. And that change window may not always be there, and it's going to be hard, but balancing getting to compliance with taking advantage of this change window to actually rethink some of these processes rather than just to, do what you do now in a different way. That's going to be the interesting challenge that I think industry is going to face over the next little while. So with that observation, I'd just like to thank all of the panelists, Vic, Ritu, Stuart, and Nish, for not only your wonderful moderation, but your critical role in bringing this group together. Thank you all for your discussion. I think we have left the audience with a lot to think about. So thank you again. And to the audience, if you do have any questions that wake you up at 3 o'clock in the morning that you wish you'd asked, please do feel free to reach out to Natalie, and she will be happy to pass those on to the relevant people who are on the panel today. And with that, I will let you get on with your day. So thank you all very much. Bye-bye.
Thank you.
Thank you. Thank you very much.
Thanks.